Hey guys, it's December 14th. The market's closing here in a minute, so pretty much the day is over. We have two stocks to look at today. Reminder, we're always going to be doing the biggest gainer and the biggest loser in the S&P by percentage every day. Now for the biggest gainer, we have a company called Alexion Pharmaceuticals. They were just bought out, or the offer was made to buy them out. I just saw it, so I'm going off the dribble there. Now, interesting thing, the biggest loser today, down 7.9%, 8% basically, is Occidental Petroleum, which I believe we did last Thursday for our video on the biggest gainer of the day. And this is what happens a lot. So I'm not going to go over that stock again, but this is what happens a lot when you have big fluctuations in price. Biggest gainers can become big losers. Not necessarily the biggest loser, it just happened to be the way it was today. So we're going to go over Alexion Pharmaceuticals, see what happened with them, see what the company who's buying them is seeing in them. So let's just go ahead and click on it. Let's see. Alexion takeover is a major expansion for, AstraZeneca is buying them. So let's see. AstraZeneca is buying them for $39 billion. So their current market cap is $26 billion. So now I wonder if this is not updated. Maybe that's why it's not updated. Let's see right now. Let's look up the stock on my trusty Y charts. There you go. So $39 billion. They're currently at $34 billion. With the recent stock rise, people want to have a little cream on top, as well as there's still a chance a takeover doesn't happen. So you always want to account for that. This company has been around for a long time. It's been publicly traded since 1996, it shows, at $2 a share. It's now at $156. In 2014/15, it got all the way up to 190 or 200. It's a pretty big jump, but it's been down since then. They did $5.86 billion in revenue. So just to read below their recap, Alexion Pharmaceuticals specializes in developing and marketing drugs for rare, life-threatening medical conditions. Okay, I think they pretty much all do that. But its blockbuster product, Soliris, is approved for, paroxysmal nocturnal PNH, and a bunch of other big words that I'm not even going to try to pronounce. This is terrible. So targets rare diseases with high unmet need in hematology, which my father is a hematologist and oncologist, nephrology, metabolic diseases, neurology, etc. So cardiology. So they're clearly aggressive. Let's go through the 8 pillars on Alexion Pharmaceuticals. Like I said, market cap's $34 billion. Their current PE is 37. That's up a lot from today. It was probably 25 when the day started. So that's an X there for the PE ratio. Profit margin last quarter was huge, 36.39%. For the trailing 12 months, it's about 18%. So both are still check marks there. That's good. Look at this gross margin, guys, 91% last quarter. That's huge, and that's expected from pharmaceutical companies because their biggest cost is developing the drug. Afterwards, it's basically just a bunch of chemicals put together. So it's not as costly. They have a very high gross margin on every extra unit made. So far we have an X on PE and a check mark on the gross profit percentage. So let's go to their financial statements. See their revenue growth. We have annualized revenue growth since 2015. So we're at 2.6 billion, 3 billion, 3.5, 4.1, 5 billion. Major check mark there. That's massive growth, almost doubling since 2015. Their profit grows a check mark there. Profit 144, 399, 443, 76, and a massive jump to 2.4 billion. Now, that's a huge jump. Why did they have a huge jump? So that's interesting. That to go from 78 million to 2.4 billion. So that's something to look into. Like I look up here right now, and last year they had a big $1.25 billion charge to their expenses. So they would have made about $1.3 billion. So it's something to look into before you buy this company. You want to understand why they had such an increase in profit. I mean, usually people look at that and think, that's awesome. I look at it and say, wait a second, what's going on that caused an increase of 30 times their profit from year to year? Let's look at their last 12 months. I go to their trailing 12 months. They did $5.9 billion in revenue in their last 12 months and profit of about $1 billion. So it's still $1 billion in profit. These big jumps right here were some big gain they had. So it does seem that $2.4 billion profit was some massive profit number for some reason. So I think $1 billion sounds about right here. Now let's go look at their shares outstanding. Shares outstanding. Now this is an X here, 213 million, and it went up to 223. So they issued some shares here. So the bottom line is it's still an X. There might have been a reason for this. You want to look into why. Well, over the last decade, they've been increasing their shares a little bit. So something to look at, guys. Let's see here. Let's go to their balance sheet and check out their total current assets being more than their total current liabilities. So from a 500-foot view, that's basically their cash on hand being able to pay their current bills. It's not exactly that, but for all your purposes, that's what matters. Their total current assets are $5 billion, almost on the nose. Current liabilities, 1.3. That's awesome. Yep, that's awesome. So they have almost $4 billion in extra cash than they need to pay their current bills. So that's a very big check mark there. Now for the big love of my life, free cash flow. We want to see free cash flow growth. So what we're going to do is, remember, free cash flow is cash from operations less your capital expenditures. Capital expenditures are expressed as a minus, so you're going to add the minus sign to it. So essentially, I'll show you right here, 675 minus 286. So 5 years ago, they did about $400 million in free cash flow. Last year, they did $1.9 billion in free cash flow. Definite check mark there. That might have been that one big right profit they had. Let's check the last 12 months. The last 12 months, they've done, $2.6 billion in free cash flow. This is kind of weird. So let's see their last 5 years average. We're going to add up all their operating cash and subtract out all their capital expenditures. So the average over the last 5 years, free cash flow was $800 million. Now, as we saw, there was a lot of growth in this company. So even though this company is being bought out right now, which is probably a big reason why AstraZeneca is buying them, they have $800 million of free cash flow, but it's increasing tremendously from their revenue and profit. So to multiply by 20, I think is a very reasonable number. You might even be able to justify a little bit higher. So 800 million times 20 is 16 billion. The company is currently 34 billion. So it's currently selling for about 42 or 43 times free cash flow. That's a big problem for me. They definitely had the check mark with free cash flow growth, but to sell for 45, 50 times free cash flow, it gets a little hairy. Again, that doesn't mean you shouldn't do it, but you got to really believe in their long-term growth potential. Who knows why AstraZeneca bought them out? We could look into that. Maybe they got some big patent recently that hasn't been factored in yet. That's going to lead to a lot of revenue generation. Who knows? There's so many reasons why these companies do that. So the point of all this is to sit there and look at these individual jumps to see why these companies have had some major change in their stock price, whether it's to the positive or the negative. This was a great opportunity to look at it because this is a buyout. The buyouts aren't for sure. It could still fall apart for a million reasons. Your job is to make sure you focus on fundamentally, maybe keep this on your radar. If the company, if AstraZeneca falls through and doesn't buy them, you're sure to see the stock fall. And maybe it's an opportunity to buy a company, but go do some more research if that happens as to what their pipeline is like. So I think this is, I like the financials of the company tremendously. It's just the valuation, like all things. So again, we're not going to go over Occidental Petroleum because the fact finished down 8.1% today, but we already did it the other day. And I don't remember what we said of it actually, because I look at so many stocks every day. But either way, thanks very much for supporting it. Hit the like button, subscribe if you like this. We're going to do these videos every single day to recap the end of the day. Thanks a lot.